What's up, folks? It's Lane and Dean here. Again, this is your monthly market update, tailored more for the Hawaii investors out there. We try and go over some Hawaii real estate statistics, and then I put in my commentary on some of the national news and how it really impacts more Hawaii investors. And here we go.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the real estate Braddahs today.
All right, let's get this started. So, Dean, why don't you start us off with your monthly report? What's been going on?
Yeah, thanks for tuning everybody. My name is Dean Ueda. I'm your local real estate investor and realtor. The easiest way you can reach me is come go to realestateofhawaii.com. I also have a YouTube channel which is also called Real Estate of Hawaii. So if you ever want to reach out to me, that's probably the easiest way. So let's jump right into things. Okay. So median home prices, right, for October 2022. Um, Not much things going on in terms of price wise, anyway. So single family prices as 1.046 million, which is up 4.6% from same time last year. Condos are at 516,000, which is 3.6% up from prior year. But as you can see, for I put prior months numbers up there too. It's in the top right corner, a little bit black, but it's you can see single family is actually down a little bit from 1.1 million in September. And then you can see that the condos are actually up from 502.5 million from 502.5 thousand from last month, yeah, September. So not much action going there. Where you actually see a lot of the action is when it's coming to close transactions. Yeah, so single family we had 216 transactions closed in October, which is a 43% decrease from October 2021. And condos, townhouses, 424 transactions, which is about a 31% decrease from same time last year. A lot of it's due to the interest rate rises, as we've spoken to. I also like to put things in perspective, right? So if you look at that prior slide and you're saying, oh, we're down 43% for single family from prior year. And if you look at this chart, visually it looks pretty bad as it's starting to tail off at the bottom. But putting things in perspective, looking back 10 years, we see that it's not really um, it's still within the bands in terms of these cycles that are going through, so a lot of it is perspective, which is what I think the theme of my portion of this month's presentation is, right? So next we talk about month supply of inventory, right? Supply versus demand. So for both single family and condos, we have 2.2 months of inventory remaining, meaning that if no more units were to come available for sale, we'd um, last 2.2 months before all of the existing inventory were to be sold off. And again, the numbers, it's an 83% increase for single family, 22% increase for condos. Sounds really high, but again, we were at really um, low month supply of inventory prior to that. And again, taking things into perspective, looking back at a 10-year historical outlook, we're still not um, to the average, what it's been for the last 10 years. We're still low down here. So again, putting things in perspective. Now we're looking at home for sale, right? We're talking about the supply side. And as you can see, we have 665 single family homes available and about 1,188 condos available. And you see on the graph here, it's starting to creep up. Yeah. So, as more inventory starts to come on market, that's when we'll start to see um, prices starting to soften. But as you can see here, it's starting to creep up, but we're still relatively low, yeah. And the story is a lot different when you're talking about other parts of the country now. I think we've brought up Las Vegas multiple times. They more than tripled their inventory in the last 6 months. So prices are, things are changing over there. Um, a lot of it has to do with new inventory coming on market. So as you can see, we're actually, even though rates have more than doubled, um, our new inventory coming online is actually dropping. And we talked about that too, Lane, where it's like, if people are trying to upsize, as families grow and get bigger, a lot of people are, trying to they outgrow their first place. And if you're at a 3% interest rate in a condo, and you're trying to buy, $1 million home, but the rates are now 7%, it's really hard to do. So people have a hard time trying to um, move on, right, with these growing interest rates. So um, as you can see, inventories not helping us out in terms of new inventory or homes for sale. And again, looking things in perspective, we look at this historical outlook, and it's not very unique or any outliers in the cycles that we've had in prior years. Hot topic and everyone's talking about is mortgage rates, right? So this is from mortgageratedaily.com, and we're at 7.3 as of today. And again, as we mentioned, we more than doubled in the last since the beginning of the year. Um, However, if you look at things in perspective, back in 1981 October, our interest rate was the 30-year amortized loan was 18.45%. So putting all things in perspective, 7.2% doesn't seem that high in the grand scheme of things, but it just depends on how old we are, how much we've seen, and how many cycles we've been through, I guess. Yeah, would you say?
But it's a tough sell, man, right? Like
It
people,
is. No, yeah.
like paying double the amount of interest when you should have did something 3 months ago.
No,
Uh,
exactly. Yeah, so it's to your point, I mean, and it's only what you're capable of doing, because buying power just went down so much for people. So um I can it makes total sense why people are waiting on the sidelines now. Same thing for investors, right? I mean, Jay Powell spoke yesterday and market went down a little bit. Everyone's like, oh no, he's kind of implying that interest rates are going to be going up higher than even higher now.
but
And
when today it went up like 0.75 today, and I think it's gonna go up another couple times at least.
that's good. Yeah, I was trying to, and everyone always reads between the lines, right? Once he speaks and is trying to figure out, okay, well, what is he actually implying? And that's the part everybody knows, whatever, 0.75. And everyone wants to know what lies in the future, right? And then that's how it affects the markets. So
Yeah,
interesting. And they're like reading every specific word, right? And what that word connotes to them, right? So that's kind of
yeah.
interesting in itself, how that just can totally affect the markets. So I
Well,
always,
I mean, but here's my theory. Like the man doesn't know. I mean, he has to just increase interest rates so that our inflation comes down and unemployment comes up a little bit.
you know,
But he doesn't know that, so he's super cautious on how he words things. He's not going to say, "Oh, it will be two more interest rate changes of 0.5, 0.7," because the dude doesn't know. And if he does say something like that, then
trip
everyone's gonna get
something.
all I
Yeah,
don't know, everyone will freak out, right? It's like, oh my
yeah,
god, he said it was gonna be two more interest rates hikes, and then it'd be that. It won't. What's going on? Nobody has control over here, you know?
yeah,
So I
yeah.
get it, you know.
No, yeah, and I feel bad for the financial advisors. I don't know if I feel bad for them or not, but I was telling my other half, it's like, okay, now is when the financial advisors are actually earning their money, right? Because for this last bull market, when you're making all this money, then you don't really get the calls. But as soon as everything starts to go awry, then you start getting the calls and so what's going on and what should I do, right? So
Yeah.
And
It's
you know,
advisable that over the last 30, years, it's better to hold and not, to just read that garbage, that blurb again.
no, and yeah, to your point, I think the best advice is, if you don't really need it, then don't don't look into it, right? Don't look at your statements. Don't see what the market is doing. Just leave it alone, and th- that's good peace of mind. I think if you just don't touch it, because if it's all paper losses for now, right?
Yeah.
So
I don't know. We're not financial planners here, but
yes, this is not
yeah.
financial advice
But
by any means.
I don't have any stocks or mutual funds or any of that type of stuff. I got all real assets, so
I
no
hear
no
you. I hear
paper to look at.
you. Maybe that's a good segue to my next slide. So, being that it's, I don't know for you, Lane, but this end of the year has come so quickly. I was like, wow, I just felt like yesterday we were saying, oh, we're halfway through the year. Oh, now we're like almost done with the year. And, a lot of times people are starting to talk about, you know, planning for budgeting for next year or planning for next year, right? We just did our taxes for 2021. So now we're looking for the new year. What do we do with the refund? But anyway, I guess the majority of my portion of the this today's discussion, I wanted to talk about. Do you listen to Rocky Lalvani?
Yeah, how'd you hear about him? I know him
Um,
pretty well.
oh,
I
well, that's cool.
Yeah, I was on his podcast like 4 years ago.
Maybe that's how
Maybe
I heard about
maybe
him.
that's how
Then
you heard of him. I was gonna ask you, how do
maybe,
you know Rocky?
yeah, I don't know him personally. I just listened to his podcast. I really liked him because it really offers a balance. In terms of his whole purpose. Not, I don't think the term is coined the purpose-driven life, but he's living a life on purpose. And so he talks about, being financially, doing well for you financially, but also having that balance and having, the very well-rounded, fulfilling life. So I like listening to what he has to say. So the last guest, or maybe I forgot what number pod. It was a recent podcast that he had, but he had a gentleman by the name of Noah St. John on, and the one of the main things that he's talking about is getting rid of head trash, and it kind of stuck with me. So apparently, this Noah St. John person is, a self-help guru. He has books out, and he's also, I think he's a speaker for like executives and business owners. I'm sorry, but he's one of those that read other self-help books, and saying that, like all the other ones say too, is like, all these self-help books are saying the same thing just in a different way, and I agree with that to a certain extent. And it seems to me like, it's just what it comes down to is, which one is going to which message is going to resonate with you. And it's also a timing thing too, right? If you're not ready to hear the message, then it's not gonna stick, right? So anyway, some of his points in this podcast that I listened to just yesterday, I think, was the freedom lifestyle formula he talks about, and it's about having these four things, having the time, having the energy, the relationships, and the money. And this idea of having head trash, and it's like a mindset that you need to get away from. And I actually, my son was listening to the podcast. I was driving when we were going to tennis, I think. So he's like, oh, this is kind of cool. And I was like, yeah. So we tried to apply it to what he had to say. And it's funny because he went home and he tried to explain it to his sister, but it didn't come out so well. So I had to chime in. But anyway, head trash. It's just, the mindset of where you're thinking kind of negatively. It's like, oh, but why do I have so little energy? You know, or why do I not have enough money? It's very negative connotation. So Noah St. John says the mindset needs to switch to have what he calls, it's not an affirmation but an affirmation. The word form in it, meaning, you're trying to get there. And it's more of a positive mindset, saying, okay, well, not it's not to say why do I have so little energy, but why are my energy levels, so high? Why are they off the charts? And you might not be there, but you think that way, so that then you're thinking, why what you need to do to get there, I guess, right? So you're not focusing on what you're doing wrong, but you're focusing on what you need to do to get there. Yeah. So it's a total mindset shift. Again, nothing new. Um, I put the 12-week breakthrough because that's the I think that's a system that he preaches. But it was great because I was talking to my son about it and I was like how I can apply it to him. So a lot of times when he's playing tennis and he gets down on himself for maybe getting a lot of double faults or serving into the net. So and then he gets mad. Sometimes he'll tap his racket on the ground and he'll be like, "Man, I keep serving the ball in the net, or why do I keep double faulting?" It's like, well, according to Noah St. John, your mindset should be, oh, why am I having these great serves? Why am I getting these aces? Why am I having great top spin kick serves? But it's more of, I mean, it's a mindset shift. Mindset shift. I don't know. So it's kind of cool. I thought it was neat, and a lot of it's like timing, right? Like when you get the message, and are you ready to receive it well? Like that book Lane that you let me borrow, that I'm reading it now. I'm starting to feed off of it a lot. That seven figure one.
What's like kind of a negative loop that comes to you? Because people say, I've heard of this before. It's like, like you're listening to a radio. A lot of times involuntary, and then if you don't like the song, then you need to be conscious and say, all right, that song sucks. This radio station sucks. I need to change it. But what's one of those bad radio channels that comes in your head? You see, it's
Maybe
a lot
my
of people
my
just aren't aware of there's
yeah,
even,
yeah.
yeah.
I think, well, one of them was like my mood. Maybe sometimes um I I I find that I'm grouchy or something, and then it's like, well, ah man, what's up with me? Did I not get enough sleep, or trying to change the way that I'm currently feeling, I guess, and then maybe it's not enough sleep, or have to eat more regularly. But for me, sometimes it's that just that negativity, or that negative mojo that I gotta get rid of, and be more positive, because positivity breeds positivity, right? So I think that's, for me, would is the one of the things that I'm working on, right?
Yeah.
How about
I,
you?
I I could agree or disagree, but I do know negativity is gonna take you down a negative spiral for sure. For
Uh,
sure.
right, right.
But I don't know. Maybe I'm pretty I think that's something I'm pretty self-aware of. Like when I start to get those kind of negative thoughts, I'm like, all right, this is just like as Eckhart Tolle says, the pain body, or the ideas. Like this is not me. This is just a thought.
Mm-mm.
But I'll think of one. Think
Mm.
of one. Ask me a little later.
Okay, okay, okay. Or sometimes, to me too, sometimes I read like you said, it's like something something didn't go right today, and that, well, just move on and do something that I can control, and start doing activities that I can control and that are gonna get me to where I need to go. And like the whole 80/20 rule, right?
Yeah, I think
So,
for me it's like there's things that go wrong all the time, but then I think of it as I've trained myself to think, well, does this really matter at the end? I mean, there's been some pretty bad things that have happened, some minor things, some semi-minor things, and even like the minor major things, which are kind of in the middle. After like a week or 3 weeks or 1 month or a few months, it's just not even a thing anymore.
right. No,
So
I
like,
totally get that. Like stuff that keeps you up at night, and then it's like, wait, why the heck is this keeping me up at night? Like it at a certain point you realize this what I thought of as such a big thing is maybe a tenth of the size in terms of, that's what happens to me sometimes.
yeah, things work its way out, and that's why I
Oh,
try.
that's, yeah.
That's why I don't really do my emails anymore, and I let like the team deal with it, because after a while, it seems to like 80% of the time the problems just work itself out, and I don't need to
It,
get stressed out about it.
yeah, I agree 110%. And to your point, it didn't even need to come to you, right? It'll get ironed out, so it shouldn't have even been in your head because it shouldn't come to you until the point in time further down the road.
Yeah,
So,
yeah.
so
Or it never would have bubbled to the surface anyway. That said, you don't want to be unproactive, but that's why you can have other people deal with those problems, the better.
yeah, and that's actually something I'm trying to embrace now too. Like you said, with a team and everything now on this real estate side, and that's why that should have. I wish I had that book that you had let me borrow. That's pretty cool. And in terms of making sure we have systems and leveraging properly, and it's all about timing, right? Because I've been given that message not only by you multiple times, but by others in terms of what's our best use. And we only have 24 hours in a day, so we got to make sure we maximize it, especially if we want to have balance with family and everything else in our lives these days. So, if we're trying to grow that empire, whatever we're trying to do, we're going to make sure we're making the best use of our time and whatever that means to you. Yeah. So, moving on, I also like to end with the infamous scam of the month. So it's kind of funny. We talk about we're just talking about going to Japan as Japan opens up, and I know Lane, you're planning your trip somewhere else, but I'm gonna try to go to Japan at the end of this year. And Google Translate, there's a new phishing scam for that. Go figure, right? So I don't know if you're familiar with Google Translate. It's a free service that translates text from one language to another. So in this new scam, cyber criminals send an email claiming that important emails are being withheld in your inbox, and that you need to click on a link to log in and confirm your account, right? And of course, the link is going to redirect you to a spoofed login page for the Google Translate banner, right? And then once you log in, enter your credentials, the criminals will use your access. Will use your access to steal your sensitive information. As always, right? If you receive an email claiming that you have account problems, always go back to the original site directly. Before you click on anything, hover over it to make sure that is directing you to where it's supposed to be, and also use multi-factor authentication functionality when it's available. It adds an extra layer of controls to your systems. Although we've also talked in prior episodes about MFA scams too, so you always got to be careful on the things you do. Lane, you're on
M
mute.
MF what? Like
Multi,
what?
multi multi-factor authentications,
Okay,
MFA.
I thought of something else. Anyway, all right. So I'm gonna try and go through. Normally, I cover these slides in a lot more detail. And but if you guys want to check out the more in-depth run through of this last headlines on a national level, check out my podcast, Full Passive Cash Flow. Been doing it since 2016. If you don't know where it is, email the team at simplepassivecashflow.com. We'll get you guys lined up. But first thing here, John Burns reporting apartment rents don't go to the sky. So some of these markets like Phoenix we've been in, some of those rents have been going up like 20% in 1 year, which is just unsustainable. But that's all this article's about. I think we're starting to see the rent growth kind of level off a little bit, still growing, but nothing like double digit growth anymore. This is kind of a recap of that Inflation Reduction Act, which a lot of people joked around as, it created more money in the system, which is the opposite of what the damn act was supposed to do, right? Which is curb inflation. But, that's just how the government works, right? You put some kind of catchy type of label on the document just throw in whatever laws and bills you want in the spending bill anyway. But there wasn't very much for investors in there. Maybe there's some advanced energy protection tax credits, but really nothing juicy for, like I think a lot of our clientele are, individual investors between $1 to $10 million net worth. Nothing too much in there. So sorry about that. Maybe in the next 6 to 8 months they'll come up with another one. There might be something good in there for average people. Let's say average, but people who are kind of sophisticated enough to take advantages of what's been written into the IRS tax code. So flip ahead here. Freddie Mac multifamily investment market index down in the second quarter. So this is partly to do because of the rent increases aren't skyrocketing as it once was. And we are kind of going into the slower season, going into the fall here too. Also, occupancy is pretty high, but we're starting to see the class A and B, they had the biggest price increases in comparison to the class C people, the lower end, the workforce housing, which all makes sense because the pandemic really took a whack at the lower end tenants, where the higher end tenants, they work from home, they didn't lose their jobs, and they seem to be okay and probably in better shape where they are now. And that is kind of the problem that the Fed has. A lot of people have a lot of cash savings from the pandemic, so it's kind of hard to get that immediate feedback from inducing. They're trying to induce unemployment to come up to create the inflation to come down with the interest rates, but that's why it's not like a super quick turnaround. There's a lag because a lot of people have a lot of pent-up savings in there. Top 5 markets for multifamily deliveries. So this is the new stuff being built, and this is kind of going off of, these are the professionals, right? This is the big money. This is where they're putting in development money, which top 5: Dallas, Houston, Washington, D.C., Miami, and Phoenix. Foreclosures, it's been on the rise lately, but don't let the headlines fool you, right? That's why it's all relative. This actually kind of looks very similar to Dean's earlier slide on where the days on market, right? Like, it's been coming up lately, but still nothing where it was in the peak. I would say it's like a tenth of the peak still. But I would say they're saying foreclosure activity is reflecting other aspects of the economy as unemployment rates continue to be historically low and mortgage delinquency rates are lower than they were before the COVID-19 outbreak. Sam Zell says the U.S. economy is softening, not in a recession. So take it from him. He also complained that the Inflation Reduction Act passed in August resulted in a lot of spending and it is irresponsible, and the title of the act is misleading and it's going to add on the inflation pressure, not decrease it. But anyway, most people don't know that, so that's all that really matters, right? What is the public perception? Real Page says apartments remain hot, but peak rent growth could be in rearview mirror. We've kind of talked about this, but this has a nice little graph if you guys want to check this out on the YouTube channel. And then we also play this on the podcast too, in case you guys want to mow the lawn or do chores around the house as you listen to us here. So this one is kind of talking about the top cities where housing markets are cooling the fastest.
Oh no.
From the top to the bottom. So one would say like, oh, these were the frothy markets. So I'll just read them from top to bottom: Seattle, Washington, Las Vegas, San Jose, San Diego, Sacramento, Denver, Phoenix, Oakland, Northport, Florida, Tacoma, Washington. So this, how do you get on this list? It's like from the top to where it's at now, the kind of the cool off. Not saying that they're bad markets. I think Phoenix still is a strong market and still growing a lot. I think it was just high up there because it was such a strong market. But places like Seattle and
Vegas.
Sacramento, I would
Yeah.
definitely say our markets were. It maybe just got a little bit too much frenzy there.
My Vegas property just went vacant. So I'm renovating it and in the process of thinking sell or release, but I mean not really try to rent it back out. But like you said, we're heading into the winter months, and it's maybe not a good time for either. But
Yeah. Well,
I'm gonna
this guy Dean, from Real Estate of Hawaii told me that it's just gonna take a little longer to sell. He probably should still get the same price, you know.
hey hey, he's pretty knowledgeable
So
guy.
yeah, knowledgeable guy, so maybe you should just be patient and do what he says, know.
Could have been said any better, I should say.
Yeah. No, it's ultimately it comes down to like, do you want to keep this as an asset, creating cash flow, or do you think you
Yep,
can do better with that equity?
exactly. Yep, perfect point. You gotta weigh
It,
it, and it depends on what options you have too, right? For me, it's sitting in my self-directed IRA, so options I have various options, but then we talked about the UBTI and the UBIT. But anyway, I digress. Continue, Lane.
you haven't decided yet on that one?
We're gonna renovate it. I'm gonna list it for a few months, see what kind of action we get, and if not, rent it out in the spring.
Well, you got to make the decision now, though, right? Like you can renovate it just to slap a tenant in there, or renovating it for a residential homeowner is different, right?
Yeah,
Like,
it's a small walk up in north northeast of the strip, and so the biggest decision was to put. We did all of the other small things, but the biggest decision was, do we redo carpet and vinyl the kitchen, or do the luxury plank vinyl throughout? The difference is 3 grand, so I just said do the plank, try to sell it, and if not, at least we have, um, more durable flooring for the long run if we have to go to the rent out. And it's funny because property manager and agent both had different perspectives on which one to do, so I had to make the call. So I said, 3 grand difference, just do the plank vinyl and let's move on.
yeah, yeah. I think that stuff it's stronger and it
Yeah,
looks fancy to
yeah, yeah. And then so
buyers.
my to the property manager's point, he said, it'll look very consistent throughout. So he thinks he might get uh, a return if I, to try to sell it. So I'm like, whatever, just do it and move on. Didn't want to put too
Right?
much thought into it.
So you'll be buying here in a next couple of months then. I actually just sold my last rental last Friday.
Oh, cool.
I got the wire Monday. Thank
Memphis?
Birmingham. My
Oh,
last
cool, cool,
rental
cool.
property. Thank God.
Congratulations.
Done with that.
That wasn't the cat one, right?
Which one?
The cat one. The cat one's long gone.
Oh yeah, that was long gone. That was like
Yeah.
4 years ago.
Oh, okay,
Yeah,
okay.
this one was vacant for over a year because it just took so long to get permits and do it the right way.
Oh my.
But yeah, what a pain in the butt. I mean, okay, if somebody's listening right now and you're under a quarter million, $500,000 net worth, buy rental properties. But if you're a credit investor, there's more scalable ways of doing this, I
Yeah,
think.
I know exactly what you're saying versus getting headaches. We could, again, I digress, but
Yeah, yeah. Okay, so Arbor says here, affordable housing trends report. Some of the takeaways here. Um, well, just some of the demands, right? Like what, they're not building affordable housing. It's going up because they only build new builds, and then the rising costs of construction, of course, too. Um, and a lot of people just aren't buying houses, millennials these days. So this is kind of talking again about how the mortgage rates are pushing back people into the rental market because they're getting sticker shock over that interest rate and then the monthly payments. I mean, Dean was actually we did a house tour the other day. Dean's gonna help me maybe buy a house. I mean, I'm like looking at I'm looking at an arm, which is like people should gasp, right? Oh, an arm. I kind of know what I'm doing, but even for me, it's like I'm looking at like a 9 or 11% interest rate on that arm. And the whole point, the strategy that I might do is like you ride that. The nice thing about the arm is that you ride that thing back down when the interest rates come back down. It's one of the strategies, but it's all like the least money out of pocket, because I can have my money working for me. But yeah, I gotta admit, man, like a little afraid of that 9-11% interest rate, just but I guess it comes down to like, can you make more than that? I guess I could, but it's kind of high.
How long is it locked for?
I think like five, I mean, I think they were saying 7 years.
Which is, they say, the typical average in terms of when someone either buys, sells, or refinances, right?
Yeah, but I would do a shorter, like a 3 or 5 year arm. But also you can get some IO, interest only payment for I don't know how many years. I'm guessing like 1 or 3 years. Conversations for another day. Yeah, but don't do that, people. Just get your dirty mortgage.
No, to your point, Nate, it's I mean, I think your whole thing is, you're maximizing your balance sheet, right? But for a typical consumer, that could be dangerous, right?
Yeah,
Because you're taking the assets that you're not using and you're using it to invest in other things versus, we talked about this too, where it's like, okay, well, the average person, buy a house to live in, invest in your 401k, work until your retirement age, and you're good, right? But then, you know, that that's all fine and dandy for a lot of people, but you might reach a point where you start looking for better things, right? Which is, I think, where we are, what we're trying to do.
yeah.
Excuse me.
But I'm banging my head against the wall working with some of these underwriters. They just don't understand. But yeah, so like it's hard for people who don't have W2 jobs out there. So you have to maybe we should probably do a little spiel on this later on, but you have
Yeah,
to
that
get
sounds like a
past
good
the
idea.
income verification portion to verify. There's a couple ways. There's a 1099s or your bank, they take a look at all your bank statements. Once you're
Yeah,
past that phase, then it's up to your credit score and your your debt to income to qualify you for the right rate. So it's kind of
yeah,
like a two-phase thing.
yeah, and it's relatively unique. So, yeah, Lane, your situation is, I wouldn't say unique, but like, for traditional lenders, it's unique. So
I'll let
it's
you
kind
know
of
how
funny.
it goes.
Yeah. Yeah, how come we can't see the people who are posting these things?
I think it's because the software that we're using it
Oh,
doesn't
okay, okay.
link it back to us. But
Oh, got it, got it,
but
and
continuing on, the so this little chart here is showing the average rent collections. So most times, you have a apartment, even if it's a really good tenant base, you're gonna have at least like 3% of deadbeats not pay rent that you gotta kind of chase them for. Obviously, with harder tenants, Class C tenants or worse, it's gonna be a lot worse than that. But there is a widening gap between Class A and B and Class C affordability, and part of this has to do with a lot of other places in America, like the rent moratoriums led up, I would say earlier last year, but it really didn't start to make its way through the system until late last year to now. And it's probably still going to be an issue flushing through the set of tenants in the next 6 months at least.
yeah,
But that's
that's what I'm
probably
curious
why.
about. Yeah, I'm curious to hear more statistics on that. Yeah.
Yeah, I mean, I'll just use an anecdote. I mean, the nice thing is that some of the government assistance came back online. And my understanding how that works, it's kind of like unemployment. Like, they'll have money and then they won't. It turns on and turn off based on the government kind of paying their internal bills. Is I think how that works. So I'm guessing that's how this stuff works, where tenants can apply for government assistance. But in the past, it made sense. Yeah, just wait for the tenant to apply that, and then they start paying their rent with government money. But then it just kind of makes sense to bite the bullet and then evict them, because you could have a tenant in there for like 6 months not
Yeah.
paying on and off. And at the end of the day, especially if you're doing a value add strategy, you don't want that type of individual in there, because they
Yeah.
don't have the ability to pay the increased rents.
Yeah. Sad to say, some of them know how to work the system, and are trying to just milk it for all it's worth and stay there as long as they can. So, I mean, having a good property manager to figure those out or try to spot those up front would be good, because there was even on this island where in this complex that I have a property in, there were known tenants who were actually, trying to do this, and then they would jump from unit to unit within the complex until their name got the manager started to catch on, right? So that's kind of good property management is key, I guess, is my point to this. Yeah.
Yeah, and that's the hard thing about these. Like, there's not really, there's a credit report, but sometimes that stuff won't show up on there, right? That's somebody
Mm,
who's gaming the system.
right. And the thing is, if you call past landlords, it's kind of hard. Some of them tell the truth, but others, especially if they're currently in that unit, right? They might want them out, so it's not in their best interest to say, "Oh yeah, this tenant doesn't pay timely." So if you're trying to self-manage, make sure you call a landlord who the tenant isn't currently renting from, because there may be some bias in there.
Yeah, yeah, that's kind of messed up, right?
Yeah.
It's kind of like if you have an employee that you think is gonna sue you if you fire them. So you don't want to fire them, but you want them to leave. And then somebody calls you and they're doing, they're doing reference checks. You kind of tell them, "Oh, this is a great person. Yeah, steal, you should pay
You
them
love them.
more."
You love them.
So they just take the problem off your hands.
Yeah.
Especially if it's a competitor too, right? Oh, sorry.
Right.
I'm just being mean, people. Don't worry.
Yeah. Thank you, Cody Allen Ching, for your comments. He outed himself.
So yeah, I mean, but at the end of the day, renter incomes are going up because unemployment is pretty low, yet the not going up fast enough to catch up with rent and what people are doing, which is exactly what inflation is, part of the
Right.
inflation portion.
Right.
But yeah, anything else to kind of close out today, Dean, on your end? People have
No,
any
just kind of reiterating what we said in the past in terms of, coming close to the year end. It's all about perspective and having that proper mindset in whatever activity you're going into, whether it be whatever, investing, sports, relationships. It's having that mindset. So get rid of that head trash, as that person said. I even forgot his name. Noah St. John. My apologies. That's all I have.
Well, that's it, folks. We'll see you guys next month. One more in the year. If you guys have any feedback, let us know. And we'll see you guys next time. Bye.
Bye.